Elon Musk has just announced that SpaceX has entered the public stock market. And while most people are focused on the company's valuation and what it means for Elon Musk's net worth, there's something far more interesting that many are overlooking. Because the moment a company enters public markets, it changes forever. We've seen public markets turn companies into global giants, and we've seen them destroy companies that once looked unstoppable. History is filled with examples of both. The question is, which path will SpaceX take? Will public capital accelerate the company's ambitions and help push humanity further into space? Or will investor expectations slowly pull the company back down to Earth? Back in 1999, NVIDIA entered public markets at a time when it was still a relatively small technology company competing in a rapidly changing industry. Going public gave the company access to something every growing business wants: capital. Over the next 2 decades, NVIDIA used that capital to expand, invest in new technologies, and position itself at the center of some of the biggest technological shifts of the modern era: gaming, data centers, artificial intelligence. Today, NVIDIA is one of the most valuable companies in the world. For many investors, it's the perfect example of what can happen when a great company successfully uses public markets to fuel its growth. But public markets don't always create success stories. Take WeWork. At one point, WeWork was one of the most talked about companies on the planet. Investors poured billions into the company as it promised to revolutionize the way people work. But once the company came under the scrutiny that public markets bring, cracks began to appear. Questions were asked. Financials were examined. Confidence disappeared. And what was once one of the hottest companies in the world became one of the most infamous corporate collapses in recent memory. 2 companies, 2 completely different outcomes, one good and the other one bad. Which brings us back to SpaceX. There's a tendency to assume that if SpaceX becomes larger, more profitable, and more valuable after entering public markets, then the move was automatically a success. Investors make money, the company expands, and everyone gets what they wanted. But SpaceX was never built around the idea of doing what was safe or predictable projects. Many of the projects that define the company today only exist because somebody was willing to spend enormous amounts of money pursuing ideas that most people considered unrealistic. Reusable rockets weren't the obvious choice. Starlink wasn't the obvious choice. Even now, the company's long-term vision of making humanity a multi-planetary species requires a level of patience and risk that most businesses would struggle to justify. Public markets create incentives that gradually push companies toward decisions that are easier to explain, easier to forecast, and easier to defend, because investors want confidence that the future they are paying for will eventually arrive. For most companies, that's a perfectly reasonable expectation. The challenge for SpaceX is that many of its biggest ambitions exist decades into the future. The company isn't just trying to build better rockets. It's trying to build things that will revolutionize the space industry and the entire planet. The question is whether the company that emerges 10 years from now will still be willing to make the kinds of decisions that made SpaceX extraordinary in the first place, or whether it will slowly evolve into a company that prioritizes predictable growth, stable returns, and shareholder confidence above everything else. Because if that happens, public markets will destroy the core principles SpaceX was built on.